What is going on, fellow investors? I thought I'd do a quick deep depth analysis talking about 5 different stocks that I think are hugely undervalued right now, and I will be certainly buying more shares in these businesses next week, and my reasons why. As always, no financial advice is given. Let's get into this. Grab. Big news coming out with Grab. Ken Griffin's over at Citadel has just disclosed their 13F filings. Citadel has bought 25.6 million shares in Grab. That is really bullish. Now, we know a lot of institutions like to accumulate Grab, and that is telling you something to the point that 85% of Grab's share purchased float right now is maintained and possessed by institutions. We've got the likes of Uber, we've got the likes of Morgan Stanley, we've got the likes of BlackRock, we've now got the likes of even Citadel. And when Ken Griffin's purchases are big positions in stocks, a little bit like Bill Ackman over at Pershing Square Capital Group, there is a reason they are doing that. And that is quite bullish in my personal opinion. We know that the short interest has massively been declining in Grab since around 2024, 2023, the short interest has been declining. We know institutions are accumulating shares. As per Citadel's statement, they believe that this stock is massively undervalued. And we've seen this with Morgan Stanley and BlackRock. They've come out and even said our own analysts believe that this is a minimum $6, $6.50 intrinsic value stock today. Why on earth is this stock trading at $3.60? I am yet to know. As far as I'm concerned, the fundamentals, financials, thesis, moat, all massively increasing, but the share price has not caught on with the reality of the business, which means there is a massive disconnect from the reality and the share price, which presents an opportunity of the share price being undervalued, which means for long-term value asymmetrical investors like myself and some of you guys, this presents a really good opportunity to be loading up on some more shares, and you most certainly I will. Now, the only quick caveat I will say is just be a little bit mindful. Ken Griffins is a very manipulative individual when it comes to investing. He's not an institutional investor, he's an institutional whale investor. And he manipulates the markets a lot to the point that I actually now believe, and it's an unpopular opinion, that Ken Griffins is more influential, in my opinion, than Warren Buffett right here, right now, in this present day and age, as great as Warren Buffett is, and we have much respect for him. And we saw this a few weeks ago when the market sold off. Citadel seemed to be offloading a lot of shares, and guess who got margin called? Leonard Aschenbrenner over at Situational Awareness LP. And the same person that sold off the market ended up with resulting in Leonard Aschenbrenner being margin called, liquidated, to then only go out and rebuy his hedge fund next to nothing. So I'd just be a little bit wary when you've got whale investors going out there buying millions of shares in these stocks, especially like Grab, which we know struggles at resistance levels of $4. It could be a little bit of a manipulation going on, maybe a bit of a pump and dump. But in the long grand scheme of things, I do think this is bullish. And I probably think that this is more bullish than negatives. But we always have to proceed with an element of caution. In terms of the technical charts, whether you're looking at EMAs, SMAs, or just price movement technical charts, Grab has always generally had a support level more recently of $3.30, resistance at $4. The resistance is still there at around $3.90, $4. But the support level seems to have moved up to $3.60, where it's been tested a few times, but it's rebounded quite successfully. Even when we've disclosed days where oil has been trading high during these specific trading sessions, which we know is a very sensitive aspect to Grab's business and model, Grab seems to have maintained support levels of $3.60. As always, no financial advice is given, but if I want to be getting in on Grab, this is a perfect price. This is what I would call the entry and accumulation zone. This is a zone I would feel comfortable accumulating more shares in. And if you get into Grab today, you're going to have a much better average than me, because my average Paul me is $4.18. But I'm long on this business. I'm very bullish. And even though I'm down 14% at the time of filming, I still think I've got a crazy good value at the moment. Stock number 2, big news, Hims, guys. Did you not see Oscar's Health CEO come out on Friday and say that they are now looking at doing a partnership with Hims? Well, if you didn't hear that, you hear that now. And I'm even going to put the attachment up here to the video in where he was podcasted on. Imagine this, Hims and Oscar, both great businesses, both the future of US healthcare, merging together in a partnership where they will be working off the success and backing of each other. That is going to be very bullish news, to say the least. And that could be a very good catalyst for both businesses. Other big news coming out with Hims is the fact that they've now launched the Hers app, which is a female segment of the business here in the UK. So for any Google phone users, you now have that on Google Play Store. Android users, you will have that in the coming week or two. And Apple users like myself on App Store, we will have that in the coming month. And on top of that, in the last few days, Eli Lilly have come out and they have announced that their Zep-bound GLP-1s are now going to be sold at the end of this month here in the UK through Zavvi, which is one of those partnership businesses in which Hims has. Hims has a few different businesses. It's Hims it's eucalyptus and it's Zavvi. A little bit like with Celsius, you've got Celsius, Rockstar, and Alani Nu. That's the same with Hims. You've got Hims, Zavvi, eucalyptus, and Zavvi will now be selling tens of thousands of prescriptions off Zepbound that are Eli Lilly's through their platform, yielding in some handsome commission as a result of that. So really good news. And again, a little bit like Grab, fundamentals, financials, thesis, moat only increasing, but the share price has sold off as it usually does after its earnings. And I'm most certainly accumulating. I didn't even realise, but I bought £5,500 the past 4.5 weeks in Hims, and I intend to buy a lot more at this current valuation. I think there's a huge disconnect between the reality and the intrinsic value, which I have as per my own DCF of $52 a share, and it's at a price to sales of 2.1. I mean, come on guys, no matter how you want to look at the numbers, in my opinion, and I'm looking at this from a bearish stance, this stock is undervalued. Fundamentals improving, financials, thesis, moat, great proprietary data, great ontology with Hims Labs, great singularity scalers. The business is improving, but the share price has sort of dropped a little bit. That's a great opportunity for long-term investors. You bet your ass on buying more Hims. Going on to stock number 3, SoFi, a stock I've not touched for probably a good few months. But it's getting to the point, again, from a technical chart, we seem to have not tested $15 or even $16.50 support levels. And we seem to be quite firm at $18. And even when SoFi has dipped at 2:30 when the market's here in the UK open, or 9:30 Eastern time, or when the NYC opens, the stock seems to drop and then it quickly recumulates up, even though we've seen $17.71, $17.80, $17.90 tested. $18 is standing quite firm. So if you're looking at getting at SoFi, I think $18 is a good region, even though my average is like $15.50. I do want to be buying a few more hundred shares in this stock. Again, book value is 2-1. Trump's been loading up, as we know, per the White House ethic files that was disclosed around May time. Correct me if I'm wrong. Noto's bought around $2 million of his own money worth of SoFi. Bear in mind, he's got quite a lot of performance incentive bonuses, shares as well in the business. Yeah, really bullish long term on SoFi. Again, a bit like Grab with oil prices. SoFi is a little bit sensitive when it comes to rate hikes or cuts. But even if we have rate hikes, which I highly, highly doubt, to the point I'm actually happy to put money on it on Polymarket if need be, I still think SoFi will be a $22, $25 stock by the end of this year. I'm bullish on the business. What can I say long term? Stock number 4 is AppLovin. I mean, guys, look, I'm a numbers guy. Forward to earnings of 15.5, price to earnings of 23.5. The last time you could have got AppLovin this cheap would have been May last year, just after the Trump liberation tariff sell-offs. Prior to that, it would have been May 2024. Price to earnings of 23.5, forward to earnings of 15.5. The business has announced since 2025 that they've, the start of 2025, they've done over $2 billion worth of share buyback commitments, some still pending. We've got guidance, good, free cash flow per share, cash from operations, margins, EBITDA revenue 87%, EBITDA margins 82%. We can go on, guys. The numbers are looking good. Revenue was a slight miss of 20 million. As we know, they were expected to make around $1.94 billion as per their last earnings. They came in at 1.92 million, missing it by 20 million. But that does not warrant a $1.2 billion wipe off of their market cap because of a 20 million sell-off. And if you saw my AppLovin video, you would know that the analysts that were obviously following AppLovin with their forecast going into their guidance had their analysts' expectations towards the higher echelon of that expectation. So some could actually argue saying they probably beat on it or hit even, but because of analysts' high expectations on the stock, it sold off. Do I think the stock should still be 30% down in the last month? Absolutely not. I am buying AppLovin sub $330, and I will look at exiting hopefully in the coming months at around $400 and make a good few £1,000s profit in doing that. As always, no financial advice, but I do think it's a great business. I like them a lot. And last but not least, obviously, Zeta, one of my more newer positions. I really like their CEO a lot. And maybe it's a fetish, but I have something when it comes to founder-led CEOs. Look at Grab, Anthony Tan. Look at Hims and Hers with Andrew Doodman. Look at Zeta. Look at AppLovin. Look at Meta. There is a lot of positions in my portfolio. CoreWeave with Mike as well. A lot of positions in my core portfolio are founder-led, because generally we know, statistically speaking, founder-led businesses outperform non-founder-led businesses. So I'm going to do a video talking about it. It's one of my absolute highs when it comes to my thesis. I like to have founder-led businesses that I generally think they're good. Zeta is one of them, and I think they've got an extremely good CEO. great proprietary data, get great singularity scalers, great ontology, huge backing from Alex Karp and Palantir. And I think Zeta is still undervalued, even though it's had a huge pump long term. As always, no financial advice is given. I will be buying these shares next week. Take care.